Session bias for pound sterling to US dollar is range-bound with downside pressure. Let me be crystal clear, we are not trending. We are not breaking out. We are coiling inside a compression zone that historically leads to a 100-plus pip expansion. The single invalidation level that flips this entire bias is 1.3439. Write this number down. If we get a daily close above 1.3439, the entire bearish structure resets and I become a buyer. Until then, every rally is a short opportunity. Write this level down. If we break 1.3439 today, the entire structure resets. Now here's what the herd is doing. Retail long positions just jumped 18% on this tiny bounce. The same crowd that got long at 1.3500 is now averaging down at 1.3380. That's not conviction, that's desperation. And desperation gets liquidated. Let me walk you down the timeframe ladder because the story changes dramatically depending on where you look, starting on the weekly chart. Trend is strong sell. The 200-week moving average is sitting up at 1.4600. That's irrelevant right now. What matters is the weekly MACD has been negative for 7 consecutive weeks. We haven't seen a weekly close above the 20-week MA since September. This is not a dip buying environment on the higher time frame. This is a bear market in motion. Now drop to the daily. Also strong sell. Price is trading below the MA20 at 1.3432, below the MA50 at 1.3460, and look at the MA200 at 1.3385. We are literally sitting on the MA200 right now at 1.3380. This is a make or break. Level. A daily close below 1.3385 and the last major moving average support is gone. The daily RSI is 43.8, that's neutral bearish, not oversold. We have room to fall. The daily MACD is negative at minus 0.002 and the histogram is expanding lower. Sellers are in control. Here's what most traders miss. The 4H chart is showing a beautiful negative divergence. Price made a higher low from 1.3307 up to 1.3380. But the 4H MACD made a lower low. The 4H RSI is rolling over from 51 straight down without even touching oversold. This tells me the bounce has no engine. It's running on fumes and headline hope. The 1H chart is neutral. That's your caution signal. When the lower time frame is neutral but higher time frames are screaming sell, you wait for the 1H to roll over and confirm before entering. Key support levels. Write these down. S1 is 1.3307. That's the last defense before the September lows. S2 is 1.3273. S3 is 1.3241. If we print that, the next stop is 1.3100. Key resistance. R1 is 1.3373. We just rejected there. R2 is 1.3405. R3 is 1.3439, our invalidation level. The pivot point is 1.3339. Trade above that and intraday bias leans bullish. Trade below and shorts accelerate. The ATR is 73 pips. That's your expected daily range. We've already used 38 of them. There's roughly 35 pips of average daily movement left. Don't force trades into the close. Now let me connect the dots between the news and the price action because this is where 90% of retail traders get destroyed. Headline says, pound gains as tech rebound eases risk-off pressure. Sounds bullish, right? Here's what that actually means. The FTSE 100 bounced overnight because Nvidia and AMD rallied in Asia. That pulled sterling along for the ride through correlation, not because anyone fundamentally changed their view on the UK economy. The pound is a risk currency. When global risk appetite improves, sterling gets a sympathy bid. But here's the trap, that bid is borrowed. It's not earned. The core driver for pound sterling to US dollar remains interest rate differentials between the Fed and the Bank of England. Right now, markets are pricing 75 basis points of Fed cuts by December. For the bow, 60 basis points. That gap is closing. That's bearish for cable. Yesterday's US JOLTS data came in hotter than expected. That pushed US yields higher. The 10-year Treasury yield is now 12 basis points above the UK 10-year gilt. That's a spread that favours the dollar. Every time that spread widens by 10 basis points, pound sterling to US dollar drops approximately 50 pips over the following 48 hours. The 1 to 2 week directional lean is sell on rallies toward 1.3405 to 1.3439. The exact event that invalidates this view is Thursday's US initial claims number. If claims spike above 250,000, the dollar loses its yield advantage and I flip neutral. Do you think the dollar breaks 105 on DXY this week? Comment yes or no. I'm tracking consensus. Most people skip this section. That's exactly where the money is made. Keep watching. I'm giving you 3 distinct strategies, different risk profiles, different time frames. One invalidation level above 1.3439 applies to all 3. Strategy 1, the sniper, conservative. This is for traders who wait for the highest probability confirmation before pulling the trigger. The trigger condition is a 4H candle close below 1.3307. Not a wick. Not a spike. A full candle close. That tells me the last major support has been absorbed by sellers. Stop loss goes 20 pips above the breakdown candle's high or at 1.3345, whichever is tighter. That gives the market room to retest without stopping you out prematurely. Target 1 is 1.3273. That's 34 pips of movement. Risk-reward ratio of approximately 1 to 1.7 on this first leg. Target 2 is 1.3241. That extends total move to 66 pips. Risk-reward improves to 1 to 3.3. What voids this setup entirely? A daily close above 1.3439. If that happens, the bearish thesis is dead and I take no shorts. The sniper, conservative, entry. 1.3306, for H candle close below, stop loss. 1.3345 take profit 1. 1.3273 take profit 2. 1.3241 risk, reward. 1:3.3R, to TP2, invalidation. Void if daily close above 1.3439. Strategy 2, the active trader, standard. This is for traders who want to fade the rally into resistance with defined risk. The entry condition is a 1H candle close below 1.3350 after a rejection from the 1.3373 to 1.3405 resistance zone. I want to see a shooting star or bearish engulfing pattern on the 1H at resistance first. Stop loss goes 15 pips above the recent swing high. That's typically 1.3415 to 1.3425 depending on the exact rejection candle. Target 1 is 1.3339, the daily pivot. That's a quick 15 to 20 pips. Take partial profits here and move stop to break even. Target 2 is 1.3307. Once target 1 is hit and stop is at break even, let the second half run to S1. Total risk reward approximately 1 to 2.5 on the full position. Trailing stop rule. Once price breaks below 1.3320, move stop to 1.3339. Lock in profit. Never let a winning trade become a loser. Type your pound sterling to US dollar range for tomorrow in the comments now. Let's see who's aligned. The active trader, standard, entry. 1.3350, 1H close below after rejection at 1.3373 to 1.3405, stop loss. 1.3420 take profit 1. 1.3339, pivot, take partial, take profit 2. 1.3307 risk, reward. 1:2.5R, full position, invalidation. Void if 1H closes above 1.3410. Strategy 3, the aggressor, high risk. This is the counter-trend scalp for traders who can handle whipsaw and manage risk aggressively. The setup is a long from the 1.3307 support zone with a tight stop, betting on a false breakdown and snapback rally. Entry trigger, a 15-minute bullish reversal candle at 1.3307. I want to see a hammer or engulfing candle that closes above 1.3315. This is not a swing trade. This is a 30 to 60 minute scalp. Stop loss is 12 pips below the reversal candle's low at 1.3295. That's tight. If it breaks, you're out. Target 1 is 1.3339, the pivot. That's 32 pips of movement. Risk reward approximately 1 to 2.6. Target 2 is 1.3373. That's the R1 resistance. Total move of 66 pips. Risk reward improves to 1 to 5.5. Explicit warning. This trade works only if the breakdown is a liquidity grab rather than genuine selling. You need to watch order flow. If you see 1.3307 break with volume, cancel this trade immediately. Only for those who can lose small and manage risk aggressively. The aggressor, high risk, countertrend, entry, 1.3307, 15 minutes bullish reversal confirmation, stop loss, 1.3295 take profit 1, 1.3339 take profit 2, 1.3373 risk, reward, 1:5.5R, to TP2, invalidation. Cancel if 1.3307 breaks with high volume warning. 30 to 60 minute scalp only. Not a swing. Never risk more than 1 to 2% per trade. On pound sterling to US dollar, that means position sizing for a 70 pip stop should be roughly half your normal size because cable moves fast. No positions through Thursday's US claims data. Stops are non-negotiable. I don't care if you're using strategy 1, 2, or 3. This is how you survive to trade the next big move. Let me summarize the single most critical level for tomorrow's session. Point 1.3373 is the line in the sand. Trade above it and the bouncer's legs to 1.3405. Trade below it and the path to 1.3307 is clear. Everything else is noise. Tomorrow's focus is the US initial claims number at 8:30 a.m. New York time. Current expectation is 225,000. A print above 235,000 and the dollar softens. That's your long opportunity. A print below 215,000 pound gets crushed. If you want the full breakdown on Bitcoin and the S&P divergence, that video is live now. Tap the end screen. Smash like if this gave you a clear plan for pound sterling to US dollar tomorrow. Subscribe, hit the bell, and I'll see you in the next one. Remember, the trap is green. The money is red. Trade smart.